Hey guys, welcome back. So the market all of a sudden decided to go back and switch its. So I'm switching my bias, actually going being bullish from being bearish. Last time I discussed in my videos that I said actually going below this low here, below the day closing below this would have been my first flag, which actually did happen on this day here. And this day was actually a confirmation for me to think that we're going to be going lower. Eventually we closed below the follow day through. If you watched my video last time, that's what I said, and we did actually end up going lower. As you can see, the market decided to flip all the way back up, and this is exactly why I said last time, keep your ego outside the game of trading, and then keep it day by day, and then let the market decide for you. So that's exactly what happened. If you can see the composite, the indexes, you can see that the composite, you can see that the SMH, everything actually flipped back up, so which is a good sign for the bulls. We're not seeing any divergence, like meaning that we're not seeing some indexes going lower, some of them are going higher. The Dow Jones, everything is flipped going up, showing some bullishness. IWM, XLK, and then XLE, XLF, financial sector, which is over here. XLE, what is the XLF? Kind of like flipped it. XLE, and then we have XLF. I forgot what it was. What is it? XLF. Yes, that's the financial sector. You can see all the indexes are flipping backward. So like I said, we did actually have a follow-through day, which was actually on this day. If you don't know what a follow-through day, you'll go back, just make a quick search Google, and then you'll find out what it was. It doesn't mean that we're gonna keep going higher from here, but it's a good indication that the market could be like going an uptrend from now on. So this is a follow-through day. And if you can back off a little bit, and if you see, and I did discuss this on my last video, I said looking at it on a weekly time frame, you can see that we had a big base up here, and then now we're just actually made a candle. And look at the candle that actually we made on a weekly time frame, with good decent volume coming up. And this is, for me, this is a good bullish sign. Closing above the 50 moving average. Even on a daily, we close above all the moving average, which is the 21 that I exponential, and I do and the 50 moving average. So that's a good bullish sign. So the next thing that I always guys urge you to do is every time you're thinking, let's say if you want to have, let's say this looks like a stock, and then you want to enter it. So you want to define your exit strategy. So when this trigger actually will fail. So for me, closing below it actually will, which is the low of that candle, which is 346.45. Closing below that on a weekly time frame will indicate that definitely we will to see market wants to go lower. But right now, until that happens, then then at that time we'll discuss it. But so far we're looking at a big reversal candle, green candle, that's showing that the bulls are taking over, and then with good decent volume, stop loss will be right below that. So just leave it at that. So the time right now is to go and look for stocks that actually didn't correct that much. Those stocks that are showing relative strength, those are the ones that you want to invest in, and then so you can make some money in the stock market. Another thing I want to discuss, the easy way how to do it. For me, I do use TC2000, with just looking at the relative strength, along with some I do look at the fundamentals as well. If you don't have TC2000, I did actually made a video last time about finviz.com, which I'm going to show you right now. You can actually use just a free version, and then you can see here on the criteria on the top, if you can plug in this criteria, like really simple stuff. You can change this stuff, but if you keep if you use some of this criteria, you'll be able to find really good stocks that you really want to invest in. So like EPS growth over 30%, sales over 30%, price above 50 moving average, and you want to see the stocks trading at least 200,000 shares a day. So at least an example, some of these examples, let me show you. Like first page here, you can see the Nvidia comes out number one, like this is the first stock, and you can see here that the stock didn't actually give that much on this recent correction, and that's a good relative strength. That means the investors that's been buying the stock all this time, they didn't sell as much, and that's a kind of good indication. Another one is TDW here. Look at the stock here, and you can see I'm just using the free version. You can see the stock. Let me plug this stock on a TC channel, and it's gonna look much better. So TDW, you can see that the stock, and it's an oil gas. Look at the stock. It's been going on since it actually did break out, give or take, and back in March 2022, and since then it went up over 200%. Now it's 270%. And the key that you want to take from here is, like, it did actually close below the 50 moving average, but it didn't close below it, and it didn't stay below it that long, and it didn't give that much, especially in this last correction. So if I put this stock TDW and I do compare it actually to the QQQ, for example, so we have well, let me compare it to SPY or even QQQ. Look at the QQQ. Actually, we started to like over here on the top. Look how on the top. Look at how the QQQ is on the top. Look how we went below the 50 moving average, and look at this stock here down in the bottom. It did actually win one day, and after that, it just came back and it just kept going straight. That's really that's the key for like finding really good stocks. Those are the stocks that are actually gonna be actually good runners. So that's what I mean by good relative strength. Coming back, and then of course you can always look at the for example, you can look at the sales and the growth and EPS and all that. So you may want to, for example, if you bought the stock back here on the breakout, which did happen on the 6/29, June 29th, you can see that the stock went up. If you bought it from the breakout, it went up over like what, 39%. It's close to 40%. It did actually went up 40%, and then all it's doing right now is just going sideways. So you could have like sold some shares the moment it went up like over 20% or 30%, and that's which is actually, you want to take some profit on the way up. Or you can take another strategy, which as soon as it starts to close below the 21 moving average, which is here, you can start taking some profit and just use that last low. So let's say, for example, you bought it here, and then you put your stop loss here, 5-3%, 7% maximum, and then the stock keeps moving. Just wait. That's the key for trading. When you buy it, just that's it. You did your homework. You find the stock. You put a stop loss. Just wait. Back off and let the stock do its thing. Don't predict. Don't do anything. Just let the stock do its thing. The stock went up 20%. You took some profit. Either you took it on a strength, or you wait for it until it closes below the 21 moving average on a red day like this one, and then you started taking half of it or 1/3, and then let the stock continue. If the stock continues back down here to your where you purchase, where you bought it at, get out. And then so at the end of the day, you took some profit out. If it didn't come back, and then it started making a new high after this pullback here, move your stop loss and put it down here, for example. I'm just giving you an example, okay? So you're using basically the last low as a stop loss, okay? And then wait for it to do its thing. And then by doing this, like really simple strategy, you can really follow the trend. And if you've done this strategy that I just told you, you would have been actually following the stock all this time. So you bought the stock on a breakout, for example, the stock went up, or the stock started to close below the 21 moving average, you can take some profit and then use that last low. So let's say you put in your stop loss here, you can keep moving your stop loss all the way. Let's say it went up over here, and then you move your stop loss, you get out right in here, and then wait for the stock. Look what the stock did actually. From a move that it was like 81%, the stock wanted us to digest, and then it went straight sideways. It didn't go this way, which shows you relative strength. That's a key to finding really good stock. The stock digested sideways and then decided to break out again, and then you would add whatever you took profit back here, you want to add it back here and then the stock eventually did broke out and it went up again, and then started again to going sideways. From time to time, the stock it will not keep going all forever, but the stock is still $70, so it has a room to go. Always analyze the stock and look and see how far it did go, how far is it away from that moving average, which is the key. You don't want the stock to keep going straight up. So if the stocks keep going this way, eventually it's going to correct hard. So looking at this stock right now, look how it went up a little bit this way, and then all of a sudden started. So it's been correcting from here all the way till today, which is about 1.8 months, almost 2 months of going sideways. And see how you want to see the stocks still getting close to that 21 moving average exponential. You can use the 20, you can use the 21 exponential. It's really not that big of a deal. But you don't want to see the stock getting away from home base, which is the 21 moving average. The further away it gets from it, it's going to snap back at you. So you can use this really simple strategy as your key. I hope this video give you some insight and give you tips. If you did like it, give me a like, subscribe, and if you have any questions, you can comment below. If you want me to comment on some other stocks, you just comment below, and then I'll see you next time. Bye bye.